Hello, we are Group 52. My name is Shabam Tandon.
I'm Peter Huang.
I'm Ben Janke.
And I'm ACCT3103.
The purpose of this presentation is to analyse the level of compliance of 4 firms representing different global industry classification standards sectors to their treatment of joint arrangements and operating segment reporting. Naturally, the level of compliance will vary between different entities and industries as their operations would likely be starkly different to one another. These operational differences will be assessed and critiqued to ensure your thorough understanding of compliance variances between Whatif.com, Qantas, the Macquarie Group, and Flight Centre. I'm Shabam Tandon, and I will be going into more detail in regards to Whatif.com and its changes in regards to ASB 8 and ASB 11. Whatif.com operates online travel brands to the Asia Pacific region, primarily dealing with online booking service for things like accommodation, travel, vehicle rental insurance, etc. etc. Whatif.com has not specifically stated it is compliant with ASB 8. However, with their declarations in the annual report, it's reasonable to make a conclusion that they are compliant with it. ASB 8 requires segment information disclosed on the basis of internal reports, which are provided to the company's chief operating decision makers. Chief operating decision makers get all revenue information into one main operating segment at Whatif.com. Since they are an online business, that's how they prefer to view the information. However, for greater disclosure purposes, they do split their revenues into different categories, like accommodation, flight bookings, etc. So report users gain a greater understanding of profitable industries. Due to the nature of their business, they have no internal sales and therefore they have no disclosure requirements for those. In regards to the new joint arrangement standards for Whatif.com, they have recognised the new ASB 11 standard as the more principle-based approach, as its focus has shifted from the legal structure to how rights and obligations are shared between parties. They have advocated the usage of the equity method as a disclosure instead of a proportionate consolidation, a key difference between ASB 11 and ASB 131. They also state both firms in the arrangement take responsibility for their liabilities, similar to ASB 131. However, since it's not in effect yet, Whatif have not outrightly adopted it, however they are compliant with it.
Hi, I'm Benton Janke, and I'll be going more in depth on Flight Centre Limited. Flight Centre Limited is a company that deals with worldwide travel, therefore their operating segments are identified and managed locally in 3 main geographical locations. These are the Australian region, the United Kingdom, and the United States of America. The executive team, including the Chief Financial Officer, receives monthly reports on the financials of all operating segments so they can pass judgment. Flight Centre Limited also uses an adjusted EBIT measure along with operating profits to assess the individual segment's performance against the rest of the company. Flight Centre Limited reports all individual profits and expenses to the segment that incurred them. If the revenue and expenses cannot be allocated to any account, then the resulting assets and liabilities are not recorded. This provides consistency throughout the segments. Flight Centre have no inclination to adopt the new standard AASB 11 joint arrangements before the 1st of the 1st, 2013, as the new amendment will have minimal effect on the company's reporting structure. Flight Centre Limited already used the equity method to report their joint arrangements and any investments in associates.
Hi, my name is Peter Huang. For operating segment disclosure, Macquarie Group identifies their main segments as the 6 operating groups and a corporate group as listed here, with each reflecting a different core product and service offered. In addition, the activities of the consolidated entity are segmented in terms of the products and services offered and the geographical area in which Macquarie operates. The performance of the operating group are broken down into the full income statements with NPAT, the preferred measure of performance, while the geographical and product and service segments are shown in terms of the revenue generated. Macquarie Group defines joint ventures as entities over which the consolidated entity has joint control but not control, and uses the equity method to account for these activities, following the standards set out in AASB 131. Macquarie intends to apply AASB 11 in the financial year beginning on the 1st of April 2013. Macquarie Group currently lists one joint venture, MGPA Limited, which it runs in partnership with Opta Capital Partners.
I'm ACCT3103, and I'll be discussing Qantas in more detail. Qantas uses business segments as its primary reporting format and supplements with geographical segment information. Underlying PBT is the primary reporting measure used by the Qantas Group's chief operating decision-making bodies for the purpose of assessing the performance of the group. The primary reporting measure for the operating segment is underlying EBIT, while corporate unallocated uses underlying PBT as net finance costs are managed centrally and are not allocated to the other operating segments. Qantas follows the equity method, complying with AASB 131, and is preparing to transition to AASB 11 for the period of ending 30th of June 2014. Qantas currently lists one jointly controlled entity, LTQ Engineering, which will have to be reclassified as a joint venture on the 2014 annual report.
Hi, I'm Shabam Tandon again. Between the companies, there are subtle differences between the entities in their operating segments. Whatif.com reports its business activities on a whole as a single operating segment, as all of the revenue is generated through online channels. This is how information is reported to the chief operating decision maker to make judgments on the business.
Hi, I'm Benton Jenkins. Flight Centre Limited, which is also involved in the international travel industry, has many subsidiaries that are managed and operated locally, leading to their segments being reported by geographical locations. While Whatif.com also does include greater segment disclosure for the benefit of other audiences, they disclose these segments via their business activities, not geographically, as Flight Centre does.
Qantas and Macquarie, however, list segments that relate to a specific business or core product and service. Qantas relies on underlying profit before tax for evaluating group performance and underlying earnings before income tax for measuring segment performance, while Macquarie discloses full income statements for each operating segment.
All of the firms have not adopted the new AASB 11 for their joint arrangements reporting. All of the companies currently use equity method when reporting their joint arrangements, which means the transition to the new standard will be quick and easy for all of the companies.
I hope you found this presentation informative and you have gained insight and understanding into the level of compliance of the firms discussed.
For more information, please refer to our reports. I'm Peter Huang with Nithisha Gunawardena, along with Benton Janke and Shabam Tandon. Thank you.